Hi, this is Mike Maloney, and today I've been asking myself two questions. One, could Bitcoin go to $50,000 in the next couple of months? And two, is Bitcoin in a bubble and could it crash? And I keep on pondering this, and the answers that I come up with are yes. That's it. The reason is because there's really nothing to compare to this. I can't measure it against something else. You go back in history, and this is one of the biggest things that has ever happened in history of finance. And so I find that I'm in a position where I don't know exactly what to do. There's uncertainty here. However, this chart of Bitcoin makes it look like it's in an extreme bubble right now. You see a base here and a run-up and a peak, and then it consolidates again in a base and a run-up and a peak, and then a very long base and this big run-up that it's had. But this is a linear chart. It goes 1,000, 2,000, 3,000, 4,000. The proper way to look at these things is logarithmically, so it shows the percentage change. And here you see a very different picture. Now, when I talk about a percentage change here, 1 to 10 is the same distance as 10 to 100 or 100 to 1,000. Each one is a factor of 10 times, each one of these steps that I'm talking about. And they're the same distance. So it's the same percentage change from 1 to 10, or 10 to 100, or 100 to 1,000, or 1,000 to 10,000. Now, when I first started buying Bitcoin, it was back in this area right here, and most of my purchases were made between $650 a coin and down to around $250 a coin. So most of the buying that I did was in this area. And so, I'm wondering what to do. I've got profits, and we're seeing this run up. But if you notice, it runs up, and then it bases, it consolidates, and then it takes another big run up, and it consolidates, and it takes another big run up, and then it consolidates, creating these little bowls here. And then it took another run up, and then we've had this really long consolidation that's gone over a period of years here. And now we're up in the $7,000 region. Could it go to $50,000? Well, if you take this distance from here, from 1,000 to 10,000, and you put it on top here, 10,000 to 100,000 would be right about there. And so 50,000, that's the next step below. 50,000 would be right about here. If it mimicked these other ones, that would be sort of natural for it to go up to around $50,000. But I've seen, I've been witness to quite a number of manias in the past. Before I get into this and Bitcoin people sort of attack me on being negative about something, I'm not negative on Bitcoin. I love Bitcoin. Here's my YouTube channel. And if you go to playlists, the second playlist here is Bitcoin and Cryptocurrencies, the Future of Money, ? And you'll see that frame says what I love about Bitcoin. Now, these videos go back to early 2014. So I have been on the Bitcoin bandwagon for quite a while, and other cryptocurrencies. There's articles like this one, Investing in Bubbles. And this first chart shows some of the bubbles that have happened in the past and Bitcoin. And this was written a little while ago, so you can actually extend this a little bit higher here. We're going to post the links below the video so that you can read some of these articles. But this is about how a Bitcoin investor gets used to this enormous volatility. Somebody that isn't used to it, on the first price drop that's significant, and Bitcoin goes through significant price drops over and over again, and then rallies up and surpasses its previous high. So, an investor that's used to the normal markets would sell on the first one of those price drops. A Bitcoin investor gets used to riding these price drops. So if he sees a 30% pullback, he just sits back and lets it ride. Well, that's been a recipe for disaster, though, throughout history. if we take a look at some of the bubbles, I said that there really isn't anything to compare Bitcoin to. Well, yeah, there is when it comes to the size of this run-up. The closest thing that I can think of was the insanity of the tulip mania. Now, I'm not saying that Bitcoin is a mania, and I'm not saying that it's in a bubble. What I'm saying is that we should all learn from history and try and put things in perspective. And then potentially, I never make recommendations. I tell people what I do, and I really tell people that they should study history and educate themselves on investing. It's very important. Financial education is extremely important. So the tulip mania that happened in 1637, here's the best chart that I've ever seen of it. And this is also a linear chart. So 10, 20, 30, 40, 50. So if you go back to the Bitcoin chart in its linear fashion, there's some similarities that I see here. It started out at a buck or two. This went up to $200, and then it crashed to just pennies. You can barely even see it on this chart. And the people that became the true believers and got in on this ride up here, most of those ended up spending a lot of money on these flower bulbs. And then it crashed, and they ended up with pennies. And to put that into perspective, I wrote an article, I wrote a chapter in my book. There's a piece on the tulip mania. I summed it up in just 5 paragraphs. But at its very peak in 1637, a single bulb of the Semper Augustus variety sold for 6,000 florins. And I did some research, and the average yearly wage in Holland at the time was about 150 florins. So this bulb was selling for 40 times the average annual income in Holland at the time. And to put that in perspective, if you assume that the average U.S. salary is $45,000, now my book was written a decade ago, and it was $45,000 then. Now it's $53,000, so you have to adjust that up. That means that the tulip bulb in today's terms would cost you $1.8 million for a flower bulb. Now, that you'd have to adjust to about $2.2 million today. So to get back to our story here, I've witnessed a number of bubbles in my lifetime. I'm not saying that Bitcoin is in a bubble. I showed you that logarithmic chart, and it doesn't look like it's in a bubble on the logarithmic chart. But this looks very similar to the next bubble. The first bubble I witnessed was the gold bubble of 1980. So here it is at $850 in 1980. And what you see here is a rise, and it consolidates, and then a rise and this bowl-shaped consolidation, and a rise to a new high and a bowl-shaped consolidation, a rise to another high, and then this real long, drawn-out consolidation and this blow-off top. Well, after that blow-off top, people that got in on that blow-off top, gold was in a bubble back then. Compared to the rest of the economy, $850, that says $835, but there is a day there where it'll say $850 if I can't make it land right on that spot. But anyway, so, and here we are down at $315, $303. So there's people that bought at $600, $800 an ounce and rode it all the way down to $303. So this is nowhere near as dramatic, but it's the same shape as the Bitcoin chart. And this, again, is a linear chart, just like this Bitcoin chart, which has a rise and a consolidation, a rise, and then this long, drawn-out consolidation, and then a rise that looks very similar to the gold blow-off top. The next bubble that I witnessed happened mostly in Southern California, and this is comical. We'll post the link below the video so that you can read it, but this is about the pyramid schemes that were sweeping California in 1980, and it is rather hilarious. You'll have to read it to see how insane it was. But toward the end of it, there was a pyramid scheme that you could buy into for $100,000, and that was back in 1980. So you really got to take that times like somewhere between 3 and 5 times. So 100,000, you're talking about maybe $500,000 to equal the same amount of purchasing power today. And then the next bubble that I witnessed was the NASDAQ bubble. You see any similarities here? This big blow-off top, and then it crashed. It's very similar to gold in 1980. It's similar to the chart of the tulip mania. And one of the things, this taking a look at history and putting things in perspective. Now, I've got Bitcoin. I'm going to continue to own Bitcoin, but I'm taking some off the table. I made a purchase today. I'll tell you about that in a minute. And the reason why is I listened to this podcast from Grant Williams, and it's quite a masterpiece. This is the best documentation of the 1987 market crash that I have ever heard. He has more than half a dozen guests here. I think it's 8 or 9 guests that were all right on the front lines, people that were down on the trading floor, people that ran banks, people that ran the exchange. And it is great. I believe it is a must listen. It's an hour long, but you really, really should. It's a shame he hasn't had very many people viewing this thing yet. And it really needs a lot more views. Grant has put together a masterpiece here, and it puts panic and a market crash in this historic perspective. And something is coming. I don't know what it is, but there is something coming. The markets are all doing fine right now. I don't think that anything will happen until sometime next year. It's probably going to be next fall or something, but you never know, because something could happen in spring or even this winter. But when you take a look at where Bitcoin is again, it is now probably part of the everything bubble. However, like I said, logarithmically, this thing still looks like it has some significant place to go. And we have the fact that Wall Street is finally discovering Bitcoin. They're eating crow right now. They've been poo-pooing cryptocurrencies forever, and now everybody is jumping on the bandwagon. So what that suggests to me, when everybody's jumping on the bandwagon, I just hear all these people telling me now that I've got to buy Bitcoin. The Uber driver, taxi drivers in New York, everybody's talking about Bitcoin. Everybody's telling each other they need to buy Bitcoin. And that's a sign that it's probably approaching a bubble. However, bubbles can run a lot longer than you think that they can run sometimes. I mean, I measure things and I go, this is insanity, but then the insanity continues for a couple of years. And so I have no idea where this is going to end up. But after listening to Grant's excellent piece on the 1987 market crash, what I've decided to do is once again take some of my profits and turn them into something that is three-dimensional and has weight. And my largest position in precious metals is silver eagles. I buy the silver eagle. I call them mint cases. Somebody gave them the name Monster Box a long time ago. It's a stupid name. It is not a box of monsters. This is a case from the United States Mint of 1-ounce silver eagle coins. And for each one of these cases, I also own 1 ounce of gold. So I own 500 ounces of silver for each ounce of gold. And I have these monster boxes spread out in vaults in Hong Kong, Singapore, Salt Lake City, and Toronto. And so I'm adding to my position right now, and I'm doing it by converting some of my Bitcoin profits into this thing that is three-dimensional, it's got weight, and it is tremendously undervalued now compared to the rest of the economy. I can't think of anything that isn't part of the everything bubble, with the exception of gold and silver, which have underperformed for the past 5 years. Compared to Bitcoin, everything in the economy has crashed. If you use Bitcoin as your baseline and you do a ratio chart, it's called, where you divide the price of other goods and services compared to the price of Bitcoin, what it looks like is an inverse chart of Bitcoin. Now, silver is currently undervalued compared to gold. Gold is undervalued compared to real estate, stocks, the growth in the currency supply, and everything else. And Bitcoin and the other cryptocurrencies have been on such a tear recently that I'm taking a little bit of profits. And people might, the Bitcoin millionaires out there, you might want to consider just taking a small percentage of your holdings. And every time the price on Bitcoin doubles, take 10 or 20% and put it into something else until you at least have your initial investment covered. If people had done that on the way up on the NASDAQ, they wouldn't have lost their initial investment. They would still have that after the crash. Many of my friends were in stocks that crashed to zero. And I wouldn't get involved in the NASDAQ bubble because it looked like it was already too late to me. And I was saying to myself, not everybody can get rich for free. Everybody's telling me that you just put $20,000 in here, you'll never have to work again a day in your life. And that's just not possible. And that's what's happening with Bitcoin now. We have Bitcoin millionaires that are still in high school. And so it's starting to look dangerous to me. However, I've often been early. And so what happens is I'm wrong for a year or I'm wrong for 2 years. But then when I'm right, I'm incredibly right. And that lasts a short period of time, but I end up making a large profit on it. And I protect myself from the huge losses that can happen if you're not being cautious and paying attention to history. So the financial education is the most important thing. I like Bitcoin. I'm going to remain invested in Bitcoin, but I am taking some of my profits and converting them into silver, and that is right now. So thank you very much for listening. Keep on investing, and good luck.